we will assume that we can erupt to the downside at any moment. So maybe I will not erupt right now. Maybe I will move to the downside at night, tonight. Maybe the market will have done a wave one at that point, open one of my sell stops. If I'm lucky, I will get to take profits at that dotted green line and then bounce again. All right, and do a lot of because this becomes a 1 and a 2. I can get again to see 70,300. Remember, I should be selling the upper boundary of the neckline cycle, like we have been showing earlier, and taking again $200 profits. All right, maybe this will happen, but also what can happen is that the market breaks right now directly to the downside, and therefore I must have my sequence of sell stops back to back and take profits. Over here, I'm using, I believe, $300 to take profits and about $200 between entries. So any dotted red line is a sell stop entry. Any dotted green line is a take profit entry. The next dotted red line is the next sell stop entry. The next dotted green line is the take profit entry for that sell stop, and then there's another, of course, sell entry and another take profit entry. So let's take a look at the pitch. Of course, we all want to know that we will stand out at support 2, not go beyond support 2 on the 15-minute chart for the day. These are all sell stops with related tied take profit orders for each sell stop, and then you have another sell stop below your entry. I believe it is about $200 down, I'm sure. Okay, so this means that suppose I'm selling here 69,100, I believe it was 69,100. I'm going to be taking profits at 68,700, $400 down. At that point, 68,700 is showing. This is $400 down. I can, of course, diminish the take profit projection to $300. I'm using here $400 because I'm using a very small size, just one coin or 0.75 of a coin. The smaller the size you use, the more that you can add. So assuming I have engaged a sell stop. So again, this is really 69,100. This is my first entry. So let's first take a look at the entries and then look at the size. I'm going to be taking an entry at 69,100, take profit 68,700. My next entry is going to be 68,500, take profit 68,100. Then my third entry is 67,900. This one I would take profit for at 67,500. It's always $400. Let's go over them again. My first entry is a sell, of course. Sell stop 69,100. I would take profit 68,700. This dotted green line, the reading for this is here 68,700. The entry for this dotted red line is 69,100. And then I will have another sell stop $200 below that 68,700 at 68,500. Take profit at 68,100, and then I have another entry 67,900. Take profit at 67,500. I have stopped a bit below support to 67,600. I'm stopping. I will stand down for the day at 67,500, just $115 lower. All right. So why use a large take profit? $400 will take time to actually achieve, because in this way I can use a smaller size, something like 0.75 of a coin will give me $300 out of that $400 move. And if I'm only using a small size, suppose the market doesn't hit the target, just will bounce midway, moves higher, I can relate to a rejection at a level 3. I can add another 0.75 of a coin. I can add another 0.5 of a coin and take profits earlier. I don't have to really take profits at 67,700 for my entry at 69,100. If I add higher, an equal size or another smaller size, maybe I can take profits, good profits, the same $300 that I want to take as a profit, at 68,900, 68,800, and so on. Everybody gets the idea. I would also leave $200 between each take profit and entry, so that once I've taken profit, I don't get filled immediately into the next entry. I can still, if there is a bounce after I have taken profit, uh, I have created the opportunity to short higher levels than a sell stop. So assuming I was going to short 0.75 of a coin at say 65,500, the market bounces, or sorry, 68,500. So the market bounces. Instead of shorting uh, that 0.75 of a coin at 68,500, maybe I can get it in at 68,650. Makes, of course, a big difference in terms of the yield that would be generated, and therefore allowing graceful space between each entry and the previous take profit, or the next entry and the previous take profit, allows us to manipulate bounces inside of the downtrending move in order to take better entries for shorter, and of course improve our short-term take profit zone or region. Okay, so I believe we have covered it. We should be doing this today. It's a very short-term trade, very short-term strategy, meaning the strategy can or should be planned on a day-to-day basis. You'll find here daily hedge management, right? So this is for today, assuming we get a cycle 3 today. If we don't get a cycle 3 is a cycle C. So we have an A and a B, we expect a C breakdown. It's fast, it's smooth, it's great. We'll just finish in about by the end of the day. We'll create, of course, very good money. Even if you're using 0.75 of a coin, we do something like 2 or 3 trades. Each one is around $300. If you're doing 3 trades, it's $1,000. If you're doing 2 trades, it's about $600. So it does generate good money. All right. So if we don't have a cycle 3 today, we'll get it tomorrow. We're not going to get a bounce out of the current level all the way to 71,000. Very unlikely. Of course, in markets, anything can happen, but extremely unlikely. And therefore, we focus on the daily hedge management on a day-to-day basis. Always have the sell stops arrayed on our station. These are the ones that we're going to be using today. We have them here. We'll leave them on just for a few seconds. These are the ones that I believe should work today and will probably generate, if we have a breakdown, of course, and OFC, will probably generate good money today and probably tomorrow over the coming 24-hour period. What follows next will be shown tomorrow on a similar 15-minute chart. If we get a bounce, what kind of negative momentum are we seeing, where we should recur the short hedge entries, all right? Because again, usually a C has a 3 and has a 5, has 2 down turn swings. All right, until we get negative degree 3 momentum, all right, until again we get negative, because we're not yet getting negative degree 3 momentum, we want to be focused on trading inside of the green zone or trading inside of the current market top out cycle, right? First, so again, trading only to the downside, not to the upside. So let's take a look first at the momentum. We're not really having any negative momentum on the 5 minutes. No breakthrough yet or no breakdown yet. We are not getting negative, I believe, momentum on the 15 minutes. All right, so no negative momentum on the 15 minutes. So I will not wear myself down by doing internals and labeling level ones and threes. I can get to see them visually. If I if if I don't have negative momentum on the 5 and 15 minutes, I will consider the market is moving inside of this green zone. Inside is just doing cycles inside of this green zone. Therefore, I will never engage short entries at the lower boundary of that green zone. I will only engage short entries at 50% of that green zone and higher up. So 50, let's have 50% in first. Just visually speaking, it is exactly this point. So I would only engage at 50%, take profit $200, $250, stand out, and then begin to engage the upper level of the cycle. The upper level here of the cycle is 71,280 or 71,300. Take again $200 profit. Engage, of course, between resistance 1 and resistance 2. So we all know now how to do this. All you need to do is just show the fibs between the internal resistances. So of course sell 50%, take $200 profit, sell 78.2 or 61.8. So sell 78.2 just above resistance 1, take $200 profit. So I just divided the entries into 3 between the two internal resistances, pivot resistances on the 15-minute chart. Whatever gets hit gets filled, and it's only $200 profit or maximum $300 profit to the downside. That's why we're also using only 75.75 of a coin, because two entries can get hit probably. So we are going to be holding about 1.5. Okay, so the market can move to the downside, attack the lower boundary of that neckline. I wouldn't be bothered. I wouldn't change the strategy. I would not jump into shorts, even if I believe I'm going to be seeing a breakdown into a C, so long as I do not see degree 3 negative momentum. I would not change strategy. I would not move, take lower shorts, so long again as we do not have degree 3 negative momentum on the 5 minutes at least. If we do not have this, then at some point the market is still going to bounce inside of this neckline cycle. B may not be finished. We had a very lengthy A, and we can get a very lengthy B. It's just it's just normal. I mean, B can be here. We have had A and B, and of course A, B, C, B, and we still get another B. Maybe unlikely, maybe likely. We do not speculate. What we know is we had a very lengthy A and a very small B. So that's 1, 2, 3. Just cannot be B. All right, and therefore we only go with directional momentum. If we do not have directional momentum, at least on the 5 minutes, we will not engage entries to the lower boundary of this green neckline cycle or green neckline zone. We will not miss out, because as has already been indicated, assuming we suddenly get degree 3 negative momentum showing, we already have an array of sell stops. Remember this. So if suddenly the market erupts in negative degree 3 momentum, we're prepared. We already have this array of sell stops. starting as 61,900 in this case, all the way down to 67,500. All right, so I hope we have covered trade management for Bitcoin in detail. Again, if we have already closed out the longs, because we are doing this in case we have higher longs. If we have already closed out the longs, we don't need to go into this arrangement. It's better to treat something simpler, probably. And therefore, we simply stand down until we do a swing trade at the appropriate levels, at the right levels. The right levels here are going to be between 64,000 and 65,000.